Hello to all of you. Wonderful to have you back, and wonderful to have you on another WealthE Wednesday. We had a great session this afternoon. We had hundreds of people from all over the world, and it's lovely to see you back. As always, when we do WealthE Wednesday, the lunchtime session is around the platform, some of the technical details and the new enhancements, and the deals and due diligence. The evening session is always a learning session, and tonight we've got a great group of people who are going to be the voice of the client. I have prepared a short introduction that I'd like to take us all through. But before I do it, I'd like to say welcome to all of you. So where are you from? And while you're typing that in, I'd love Lee and Alex, Fritz and David to just introduce themselves in that order. And wonderful to have you all online. You guys are all the client-facing part of the team. And as we're trying more and more is to get you involved in these webinars so that you can share your knowledge and you can represent the voice of the customer, and you can ask all the questions that you're getting asked on a daily basis so that we can get to the essence of what people are actually looking for. So welcome to all of you. Those of you online, go up to the chat box, tell us where you're from. It proves to us two things. One is that you're engaged. Two is that you know where the little box is. And if there's a third one, that maybe you know how to type. Lee, over to you.
Hello everybody, and welcome to our session number 2 of our April WealthE Wednesday. It's great to have you all online. I'm sure most of you know me, but my name's Lee and I head up global communities. I'm sure you've seen me on all the webinars and popping up into your inbox more often than you probably would like, but that is not going to change because I'm here to help build our community and keep you all engaged and together. I have been with Wealth Migrate since 2017. I'm also heavily involved in the Wealth University and also, of course, with our investors and our wealth partners. As always, I will be keeping my eye on the question box. So although we do have questions that our clients have been sending us throughout the week that we are going to be covering this evening, please do pop your own questions into the question box. I'll make sure that our panel answers them as we go along.
Fantastic, thank you, Lee. Who was next? I can't remember what order I went in.
I think it was me. Thanks, guys. Thank you, Scott. Yeah, so good evening to everyone and welcome. My name is Alex, and some of you may have seen me on a few videos so far. I joined the company about almost 8 months ago now. My history is I have been part of hospitality and client-facing for the last 7 years, and I fell in love with it at a very young age. And yeah, been part of client-facing ever since I can remember, to be honest. And yeah, I'm looking very forward to walking this journey with Wealth Migrate and helping our clients, if I can put it that way, be the human heart of the digital company. And yeah, just hold their hand through the entire journey. And yeah, that's pretty much me. Looking forward to learning and asking questions, and yeah, looking forward to it.
Awesome, thank you.
All right, so thank you, Alex. My name is Fritz, as Scott said, and I'm also one of the wealth consultants. David and I actually studied together at Tux. We studied investment management. I've been a student of finance basically my whole life. It's been my passion, and as such, I believe that I have the capability to be able to help my clients to ultimately make the right decisions with regards to our investments. And yeah, welcome to everyone. Welcome to specifically my clients, and do feel free, just like this afternoon, send me a WhatsApp if you want me to ask a question, and we can do it just like that. Thank you for being here.
Thanks, Fritz. And David, all the way from top.
So my name is David Bradfield. Oh, sorry about that, Scott. My name is David Bradfield. Fritz actually introduced me to the company. I'm fairly new, but since I've been part of it, it's been an exceptional journey so far. I know I've got a lot of clients on the line as well. Likewise, what Chris said, if you guys have any questions, you can either just WhatsApp me, I'll ask them for you and make sure those questions get answered. Otherwise, you can just use the chat box. So I'm really glad to be here as well, and I look forward to this webinar. Thanks, Scott.
Awesome. Well, thank you to all of you that are online. And we've got a lot of people from different parts of South Africa. We've got Soweto, which is one of the first times I've seen that, so that's fantastic. Switzerland, Ireland, Natal, Pretoria, Nelspruit, Stilbaai, Ghana, Namibia, Zimbabwe, so UK. So we've really got a nice mix. Now, tonight, I've got some slides that I'd like to share to start off with. But the whole purpose of tonight is that, unusual for me, is that I'm not planned. Okay, and what I mean by not planned is I said to David and to Alex and to Fritz, please come along and ask all the questions that you're being asked at the moment from clients, whether, should I wait based on currency, what's happening with the market, do you think coronavirus is going to impact us, etc., etc., etc. And what I said to them is, I don't have a pre-planned, I haven't seen their questions, I haven't been through it, but what we'd love to do is just to be able to jump around. So it's not going to be a road PowerPoint, we're going to be jumping between models and systems, and hopefully it'll stimulate you to also ask questions like all three of them have already said. And so my request is that any one of the four of you jump in at any point if there's anything you want to explain or anything along those lines, because we want to make this as interactive as possible. Is that fair? We're all in agreement? Cool.
Absolutely.
So let me rock and roll.
Yeah.
Let me rock and roll with a quick intro in terms of where we're at. And what I'd like to just run through is that Lee and I tried to come up with a name for tonight, scenario planning and how to make the right decisions with the correct information, especially in uncertain times. It sounds like quite a complicated thing for saying it's an online Q&A, but you can't really say join online Q&A. We had a really exciting thing happen today, and two actually really exciting things happened today. The one is our digital wallets went live, and so that's really a significant move in the right direction to enhancing your investment experience. And the second thing is we've made a big deal in London for a long time, and we've had a number of complications with the lawyers, and our money's actually been in the bank now for well over 8 or 9 months actually, and it actually closed today. So clearly the 8th of April will become a new public holiday in the history of Wealth Migrate, and one day when we run our country, we will make it a public holiday for everybody else. Anyway, these are the people who are online tonight, including Lee, and so you've got all their details, and if you don't, take a screenshot, or you've got the different people's numbers so that you can talk to, as Alex said, we want to be a human heart, a digital platform with a human heart, and these are just some of the humans who are behind it. I also wanted to remind you that we got asked last weekend, we were part of a digital summit where over 10,000 people participated, and we got asked to add value for free. So we agreed to put together a 3-hour real estate masterclass, which is going to be tomorrow night from 6 p.m. to 9 p.m. South African time. Lee is doing her absolute best to ensure I have absolutely no time outside of work. So I basically work and sleep during lockdown. But we have this webinar tomorrow night, and the link is there. Come and join us. At the moment, we have 750 people joining us live. Some of you that have seen us presenting will see some of the same slides again. Obviously, the fundamentals of investing do not change. And but if you want to go deeper, it's again going to be an interactive session. I'm hoping that Alex, Fritz, and David will be joining us and will be interacting with me through the process, asking questions, jumping in with their opinions, so that rather than it feeling like a one-way PowerPoint, it'll be much more of an interactive session. So even some of the stuff, as we always say in life, two things. One is if you know something but you're not doing it, then you don't know it, and repetition is the mother of skill. And by the way, we normally sell this. In fact, we're about to launch a course where we're going to sell something quite similar to this for $997. But because of Corona and wanting to give back to our community, we're actually doing it for free tomorrow night. So I really hope people don't have that wrong sense of when you pay attention. And so the opposite of that is when you don't pay attention. Okay, what is this webinar about? It's about freedom. Our number one passion is providing people with freedom. At the end of the day, I don't care where you want to live. I don't care where you want to send your kids to school, university, who you want to donate your money to, when you want to retire, or anything along those lines. What we do care about and what we're deeply passionate about is providing you with the ability to make the decisions your freedom to make those choices. It's things like peace of mind. You know, it's so interesting in a time like now, we're in the middle of Corona. How many people, how valuable is peace of mind? How valuable would it be for you to know that your finances were fine, that you had multiple passive income streams coming in from all over the world, they were economically stable and predictable income, and you just had the peace of mind that the biggest frustration was that you weren't able to leave your house? What about preservation of wealth? You know, the Rand has lost, the currency here in South Africa has lost whatever the percentage is, 20, 30% in the last 3 months. What impact has that had on your wealth? We were on a webinar in Italy. Alex and I were with someone in Italy literally on Monday. I was on a call yesterday with someone in where was it, India, and everyone's got the same concerns: preservation of wealth. The stock market has lost 40, 50%. Wealth is decimated. You know, currencies are being cut. Wealth is decimated. And then lastly, what about a plan B? You know, any good entrepreneur doesn't just have a plan A, they've got a plan B, C, D, E, E, F, G, H, I, J, K, etc., etc., etc. And most people, when it comes to their investment strategy, is trust my financial advisor and hope that he or she is right. I suggest maybe a plan B. In terms of your investment, one of the things that I think maybe you could do in this Corona lockdown time is get clear on why it's important for you. You know, everyone is always trying to focus on the how and the what, but if you don't get clear on your why, you will never get there. And I'll talk a lot more about that tomorrow night in terms of the process. So we're in very interesting times. Depending on what you look at the moment, the stock market has lost anywhere from 40%. We all knew it was coming. Go and look at my Wealth Insights, where I speak weekly and I bring out weekly videos. Myself and many other people far more esteemed than myself have been talking about a global correction for a long time. There's a book I highly recommend by Ray Dalio called Principles. There's another guy called Jim Rogers, and you know, even the likes of Warren Buffett, etc. And they've all been saying the market is due a correction. Coronavirus was merely the thing that made it happen. But this one is different. You know, we've had global shutdown. It's happening all over the world, all at the same time. At the same time, people are in a space of fear for their own health, for their moms, for their dads, etc., etc. So what does it all mean? Well, in any cycle, everyone always focuses on the right-hand side of this graph, which is the massive up-down. And what's so interesting is that people like Warren Buffett say, be fearful when others are greedy and be greedy when others are fearful. Now, we've heard that 100 times, but do we really know what it means? Well, the bottom line is that in any crash, the most of us get caught up in sentiment and we get scared. And we don't look on this side of the graph, which is around the fundamentals. What are the fundamentals? What are the things that are not going to change? What knowledge do I need to have? What mindset do I need to be able to have to make the right decisions during times like these? And you know, when it comes to user engagement, this is one that's interesting to me. This is an old slide of ours from 2015, where we said when it came to the internet, people would consume, participate, transact, and invest. They'd go from publishing to social media to e-commerce, and then it would all come together, and ultimately we would have social commerce. Now, there's an article I'm going to share with you where they spoke about collaborative consumption. That is a mixture of social media and e-commerce coming together. It's Alibaba, it's Airbnb, it's Uber, etc., etc., etc. But this next paradigm is going to be about collaborative investment, and I'll talk a lot more about that tomorrow night. Why is this happening? Well, whether you like it or not, this is actually my 12th year of doing webinars. 12. Yes, you heard right. I did my first webinar in 2008. And yet most of my friends, and this is a fun time we have every Saturday where 17 of my mates from university get together. They're on 6 different continents. But yet most of my corporate mates, this is the first time they've ever used an online environment. It's the first time most of them have used Zoom. And you know, when you look at the stock markets around the world, it's the first time that they're starting to have AGMs. And so what you look at in any adoption curve is that in the beginning, people come from a place of pleasure. You know, you might or might not have heard this, but I got my first cell phone in 1999. My mom said it was extravagant. I definitely came from a place of pleasure. Nowadays, you would be very much in the laggards if you didn't have a cell phone. And pretty much every single person I know has a cell phone, whether they like it or not. And so what's interesting is that what Corona is creating is us to go up the adoption curve, whether we like it or not. Some of you, this might be the first webinar you've ever been on. many business people are trying to figure out how to run their first webinar. In fact, I was on that events this weekend, and speakers, that's their business, speaking, don't know how to do it online. It's absolutely incredible. And what's most interesting is that people move 4 times more away from pain than they do towards pleasure. And so my question for you is that we're going through a global change, whether you like it or not, it is happening. And what are you going to do? There's this great article, which I'm not going to read the whole article. Sorry, I need to. I've got all the questions open here. So let me go there and let me go there. So this article is all around how WhatsApp was actually created during this time. It talks about the massive challenges back in 2009. It talks about how they got seed funding. But the thing that I like most, there are 3 main learnings from this story. A good idea is a good idea, no matter what the climate. People wanting to invest online, it's happening. Whether we do it or someone else does it, it's happening anyway. Entrepreneur grit and tenacity makes things happen, even in a crisis. And when the right crowd supports a project, anything is possible. So while most of the world was in free fall, and the entrepreneur and those who backed him were getting on to business, and they went on and sold that business for 19 billion with a B dollars. Now, there are always people who tend towards negativity. Uncertainty sends them into a tailspin and causes them to panic and blame mode. These are the ones saying the government should be doing more while secretly stockpiling toilet paper. It's interesting today, I heard Donald Trump was blaming the World Health Organization for not doing enough to save America during the corona crisis. It's amazing, you'll always find someone to blame. And good entrepreneurs thrive in any crisis. They revel in the most complex global challenges. Creativity is in their DNA. It's how they are wired. During the periods of social noise and meaningless political bullshit, good entrepreneurs have the unique capacity for silent clarity, unwavering determination. In fact, stay with me now. This is exactly when entrepreneurs do their best work. So I applaud you for being online tonight, because that's exactly what we're doing. Let's focus on the fundamentals. Let's focus on the facts. Let's not get caught up in the hype. And lastly, I wanted to share with you 2 things here. One is that there's going to be a huge focus on purposeful driven businesses. And the second is that there's been a large, where did it say it here? Here we are. This, so in 2009, it created a period of collaborative consumption. And now the world's going into a period of collaborative investment, which is where we all work together. Now, why is this important? Well, whether you're from South Africa or not, there's a great article. And Lee, I'm not sure if you've got these 2 articles. I think you do. If you wouldn't mind just sharing the 2 articles, the links in the chat box for everyone, please, so that they can go and read it. There's an economist who came out called Magnus Haystack. This article is from today. And what is so interesting is that he pretty much said the middle class has been wiped out in a short 10 years. Now, I don't have time to read the entire thing, but what he's done is that he's looked at all the different scenarios. What is also interesting is he said here, buying property overseas was one of the best things you could have done. But he says the problem is that all those seminars marketing properties in England, Cyprus, Portugal, Malta, and even Mauritius have been put on hold because the currency's changed. I did email Magnus today and said that's not the truth. Because platforms like Migrate now help you invest from $100. So you all have access to opportunities. But what's really interesting is that he wrote all about the stock market over the last 10 years and how it's literally busted. And what it means by that is the terrible returns that have been achieved. You can actually see the returns and how bad they've been year on year in the stock market. He's spoken about how most middle-class wealth is in pension funds and the stock market. He then went through pension funds and how their terrible performance equally bust. He went through residential property, as in local residential property in South Africa. It's bust. He went through property syndications, bust. He went through exotic game buffaloes and other capital traps, bust. And he said, so where is any asset class mainstream wealth? And he pretty much said Kruger Rands and physical assets are the only thing. So what should one look at? Well, he spoke about offshore equities and the returns that offshore equities had done. And he's got a great graph here comparing offshore equities to local equities. And I want to repeat that up top here, he basically said that offshore property was one of the best things that you could have done. But the problem is that most people can't afford it, which is the whole purpose that we always talk about. And in summary, he talks about the massive challenges that people have. And pretty much unless the millionaires, the US dollar millionaires, externalized their cash over the last couple of years, then they would be in serious trouble. So I thought that was a pretty good lead into tonight, because we're here tonight to discuss with our panel the questions that you all want to discuss. And I thought that, you know, don't take my word for it, take Magnus Haystack's research, which literally came out today, the 7th, or sorry, yesterday, the 7th of April. And that's that article. And for me, what's really important is that we are now going to go into a session of open Q&A. And I don't know how you guys want to organize it or plan it, but I'd like to pretty much hand it over to you now, where I wanted to set the scene for everybody, but now focus on, you know, what is it that the clients are talking about? Because a lot of what I've shared with you, people already know. What do they do about it? That's the question. Over to you.
Sorry, my mic was off there. Scott, if I can start, you know, the most important part of tonight, and something that we've been dealing with as wealth consultants for the last few weeks. I mean, the most important thing is, you know, you wake up one morning and the rand is at more than 19 to the dollar. You know, what do? You're sitting with your rands. You are liquid. If you are, you know, if you're lucky enough to be liquid in this time, and now you're wondering, you know, what's going to happen. We had a downgrade from Moody's as well. You know, is there going to be a strengthening of the rand? Are we going to see 15 rand to the dollar again? Personally, you know, I don't think so. That's my opinion. I think that we've had a fundamental shift in you know, the average rand to dollar ratio when something like that happens. But that's basically the main focus. I think David and Alex can agree with me as well. That's the main thing that we're working on now, is trying to ascertain as to when one would have to take a position, and what would one take a position in, and how long would it take for you if you were to overcome that barrier and decide, you know, invest now, take a position in something now. How long would it take to make up that you know, that expense?
Yeah, so what's interesting is that, you know, Fritz, this is an answer. It's so interesting because it feels like for many people, this is the first time they're asking the question, okay? And yet, I've been helping people invest internationally since 2004, and I've been helping South Africans invest from South Africa into England, Australia, and America since 2006. And what's fascinating to me is that no matter what the exchange rate is at the time, people say to me, but the rand used to be stronger and it's going to get better. And so should I wait until it gets better? And what's interesting is that you can see here, and I presume you can see my highlighted article, you can. So in 2010, the rand to the US dollar rate was 7 rand 54 and actually strengthened to 677. Now, I remember a time, and I think I'll be able to find it for you. Let me look here quickly. So I'm going to keep talking. I remember a time when I was helping people invest in American property, and it was 8 rand to the dollar. Okay, and it was so interesting because I've shared this with you guys. I just wanted to see here quickly if I can find it. There we are, procrastination price, November 2013. So what I did back in 2013, so 7 years ago now, and people came to me and they said, yeah, but Scott, the rand is, you know, it's So here we are, you can see the rand was 8 rand to the dollar. So in August 2012, we had started helping people invest in American property for the first time. We actually got the bottom of the market within 3 months. It was 8 rand to the dollar, and people were buying properties at like 50% of replacement cost. And at the time, I'll never forget, I remember meeting one of the, a couple of months later, you can see here, so it was like 3 months later, it was October, the rand went to 886, okay? I presume you can see my slides, Fritz. I want to use real life stories. I don't want to just give opinion. I actually want to give real life stories. So we went in October 2012, and it was one of the top property people in this country. I'm not going to mention names. And he actually bought a house off me. So he bought a property. He signed the contracts for it, and the rand was at 886 to the dollar. And we did a webinar with this guy, James Painter. Now, James Painter has written chapter 2 of my book, Property Going Global. I don't have a copy available right next to me here, but anyway, I'll get one up just now. And he wrote chapter 2 of my book. In fact, I can get you a digital version up quickly. And all around how currencies work. So we're talking about the rand now, but it's any currency. And it comes to sentiment. So my book came out in 2014. And if you look here, and if we go quickly through to chapter 2, you can actually see that chapter 2 is why wealth migrates, or why send money overseas, understanding currency and values. So I would recommend to start off with that anyone reads that chapter, because it's all around the way that James Painter does it. Now, in simple terms, you could get into the technical terms and say that he uses Elliott wave theory and that it's 5 waves up and 3 waves down, and he explained it on the global update last week, which again, the wealth consultants could share with people if they're interested in. However, what I would recommend is that in simple terms, it's patterns. The way I understand it is that he's like the weatherman. He looks for patterns. And so what he does is he goes out and he looks for patterns. And so I've used dynamic outcomes now for more than 10 years, and he looks for patterns. So this is the latest forecast. I actually downloaded it today. You can see it's, well, whatever. The next one's coming at 11 p.m. They're based out of America, so it's whatever, whenever the latest one is. But this is the latest one. I downloaded this today. Oh, there you can see the third.
They call it technical analysis, Scott. That's what he uses.
Yeah, perfect. So what he did, and at the time, I'll come back to explaining these graphs just now, is he said that with more, so you see how he's got these probabilities things here, where he actually has probabilities. Okay, I was the one to ask him to do that. You see these probabilities here? Because I was like, well, dude, you like saying it might go up and it might go down. That doesn't exactly help me. Like, give me probabilities. What is the chance of it? So we were at 886 at the time. Remember, come back to real life examples. So we were at 886. It was October 2012. And he said it'll be over 10 rand to the dollar within the next couple of months. And I was like, really? And he was like, or the next year or something, I think. And I was like, wow. And I said, what probability? And he was like, literally 100%. I was like, okay, that's fairly, whatever, strong. And I had my top client, one of the top people in property in South Africa go, no, that's rubbish. My banker tells me that it'll be back by 8 by Christmas. So remember, we were at 886 in October, and it'll be 8 by Christmas. Well, it literally slid through 9, and in 2013 just slid all the way, through 10 and never looked back. I mean, it's never been anywhere close to 8 rand to the dollar. So what I did, Fritz, to start off with, is that back even a couple of years ago, even when it got to 10, people were like, oh yeah, but it's 10, it might get better. Okay, so I gave them scenario planning. I mean, you can literally see the stuff I did. This is not the first time I've dealt with this. The rand has slid, and people are like, oh, hectic. What do I do? Do I sit on my hands? How many people that bought at 10 rand now wish they had done it? Or sorry, like when it got to 10 and they thought it might get better, might get to 8. How many people wish they could have invested at that, at 10 now? How many people wish they could invest at 15? Okay, so let's come back to the technical analysis. What I then did is I then went and built a freedom calculator. Okay, so what's important here in the freedom calculator is that I said, okay, if I'm going to invest $10,000, what would it mean to me if the scenarios get bad or worse, okay, or best case scenario? So pretty much I said, if we take a property in America, we're getting about a 15% internal rate of return. So that's 8% cash on cash, so that's 8% income, and about 7% capital growth. Just are you all three of you with me so far? Please shout if anything's not making sense.
Yeah, we're with you.
Okay.
Yeah,
And
with
then
you, Scott, if I can just add something
fire away,
about
David.
the technical analysis. From a fundamental point of view, because I know a lot of people don't believe in technical analysis, but from a fundamental point of view, South Africa has a lot of debt, foreign denominated debt, and as the currency depreciates, we struggle even more to pay back that foreign denominated debt. So they call it a currency crisis in times like these, where your emerging markets like South Africa and Brazil, they can't pay back their dollar denominated debts in rands. And as they start paying them back, it creates a further run on the currency. It just adds more fire to the flame, basically.
Yeah, so I think one of the things, David, from my side is that I don't disagree with what you're saying, but I know about as much about currency as I've just explained in the last 5 minutes. So I'm not going to sit here and try and sound like an expert in currency. But what I'm wanting to try and show people is that Alex asked me to build this for one of his clients. So I'm going to save this quickly because I literally built it not even a month ago. I think it was like 2 or 3 weeks ago, actually. But let's just save a copy. And you can see at the time the rand was 17.50. Now, quite frankly, I'm sure quite a few people would like to have the rand at 17.50. But let's just go to XE, which is the one I like to use. And let's see exactly what it is today. So I just believe, there's lots of them, but I just believe this is the best one to get the mid-rate. And we can see that the rand is at 18.28, so call it 18.29. Oh, my laptop is running going on a go slow today. Why is the Excel not opening up?
Because you have 100 tabs open.
Okay, so 18.29. Okay, now what was interesting, I was on a call with one of the top Nedbank executives, and they said that the rand will slide to 21. Okay, like in terms of 21, 22. If we go back to James Painter and we go to here, now I've got no interest in the daily outlook, okay, or even the weekly. I'm not a day trader. I'm not even a stockbroker. I look at it from a 5-year perspective. Why? Because when you're investing in property and you're looking at long-term assets, you're looking at least a 3-year plus view. And so he's got a short-term view, he's got a medium-term view, as in the next couple of weeks and months. Okay, so if you look here, you can see there's a probability of it maybe topping out and coming back. And then this one, there's a 40% probability of it going up and a 60% probability of it getting stronger. So what this is basically telling you is that it could get back to 15. Are you seeing where I'm looking here? By 2021, the best case scenario is that it gets to 15. Are you with me?
Yeah.
The best case scenario is it gets to 15. Okay. And worst case scenario is that it's somewhere in this 21 rand range. So let's go back to this, and this has already gone up a rand from 3 weeks ago. Okay, in terms of it. Now, I don't have a crystal ball better than any of you. I just like to use models and maths because it's not perfect, but at least gives me some sort of indication. So I invest my $10,000. Let's look at scenario number 1. I do nothing and the rand recovers, best case scenario. So what that basically means is I have $10,000 today, but I do nothing. And I decide to invest in a year's time. Now, the assets in America, as an example, in good quality income producing assets, the prices will keep going up. Why will that happen? Well, because in a cash crunch, capital goes towards predictable income. And so prices, cap rates come down, prices go up. I can get as technical as you want, but that's not the point. Prices will go up. So your $10,000, you will now need $10,700 to buy the exact same amount of property in America in a year's time, based on long-term averages, which, taking into account the best case scenario on the Rand, will cost you 160,000 Rand. Okay, so are you with me that scenario number one is that you wait for a year, and according to this graph, okay, according to him, there's a 60% probability. There's a 60% probability that the Rand will get back to 15 Rand to the dollar. And so you wait for a year, you wait for it to get to 15, and then you invest. Are you with me? That's what scenario number one means.
Yeah.
Scenario number two is you invest now and you benefit from the capital growth and the income. Because if you invest in an asset, you're going to earn income every quarter and you're going to earn the capital growth. And so you benefit from the capital growth for the year in dollars, and you benefit from the income in dollars. And scenario number two is the Rand stays exactly the same. So you can actually see that the difference, and you can see the difference down the bottom here, is I've worked out what would it be. D14 is, again, the best case scenario. You wait a year just on income, or if you take income and capital growth. Okay, but what you've also got to look at is what's the worst case scenario. What happens if the Rand goes to 21 Rand to the dollar? Well, if you invested now, you would be up by 50,000 Rand, or nearly 70,000 Rand. So well over 25%. Do you see with scenario planning, you've got to look on both sides of the fence. What happens if it stays the same? What happens if it's worst case? Okay, scenario three. You invest now and you benefit from the capital growth and the income, and the Rand improves to best case scenario. So you invest now at 18 Rand to the dollar, and in a year's time it's at 15, and all your mates are going, haha, you're an idiot, you should have waited a year. Well, is that the truth? Because when you look at the return, you actually come out at net neutral, comparing waiting for a year versus investing now and earning income and capital growth. So you're net neutral on the best case scenario, and you're way up on the worst case scenario. So as a betting man, if best case scenario is you stay at net neutral and worst case scenario is all downside, well, then you've got to start looking at net neutral, I would think. Scenario number four, invest now and benefit from the capital growth and the income, and the Rand goes to the worst. Well, I think it goes without saying that that you would be in a much better position in terms of where you would be over time. And then lastly, scenario number five was, I get asked all the time, my house is paid off in South Africa, or I own a portfolio of properties. I was going to put in $10,000, and again, if you're thinking $100,000 or $1 million, it doesn't matter. It's the same maths. What about if I take a mortgage out on my property and I borrow 9 or 10%, whatever my borrowing rate is? What would that mean? And so rather than investing $10,000, I'm now investing $20,000, of which 10,000 is coming in a mortgage and 10,000 is capital. And again, I've actually said, and even taking that into account, the Rand improves to the best case scenario. What would that mean? Would I be better off? So even if the Rand improved to the best case scenario in a year, you'd still be better off by a long way investing now and the worst case scenario. So let's look at this from a graphs perspective. So these models are all mapped out on the next page with all the different items. And there's 4 items basically, and I don't know if this is big enough for you to see. So the first question is leaving your money in the bank. Okay, so basically we worked on a scenario where you're getting paid, can't remember here, there 8%. So you're earning 8% per year, you just leave your money in the bank in South Africa. By the way, if you leave your money in the South African stock market, you're lucky if you're getting 8% positive, and a financial product, you're about 8% as well. You invest in South Africa. So that's actually buying property in South Africa, and it takes the long-term returns there of both capital growth and income. So 12% on capital growth, 8% on income. That's the 30-year average. Quite frankly, the chances of you getting that over the next 5 years in South Africa are quite slim. But let's work on long-term averages, not on opinion. You wait a year and the rand recovers. So you can see there that in the year one you get nothing because you wait a year. You only get started a year later. You start now, and you start now with finance. And what I find most interesting is that when I go and look at the graphs, because again, I only look at numbers. I don't get caught up in opinions. If anyone ever wants to have a fight, I have no problem with having an argument as long as they got the data to back it up. And if you take the graphs and you take it over a 30-year period, you can see that option number one is that money in your bank would not equal sort of even $20,000. Remember, you're starting with 10 over nearly a 30-year period. What is 30 years? It's 2020 to 2050. Investing in South Africa, you would have about $56,000. I find this one really interesting because it's all about compound growth. Option number three was you wait a year. So it's your best case scenario. You wait a year and the rand recovers and then you participate. You would have $76,000, call it $77,000. And if you took action now, even with the rand more expensive now, I acknowledge it's more expensive than waiting a year, you would actually have $82,000. So you'd be more than 10% better off. So again, as a pure scenario planner, you could wait a year and best case scenario with a 60% probability, according to James Painter, the rand will improve to 15 rand. With a 40% probability, it could go to 21, 22 to the dollar. And either way, you're better off by getting started now, according to the maths. And then if you leverage it and you double up, you obviously double up on the results taken into account. Now, the last thing I would say is that, David, I don't disagree with anything that you've said around currency, but what I like to look at is rather long-term trends. If inflation in America is sitting at 2 or 3%, and inflation in South Africa is sitting at 6 or 7%, there's a 5% differential between them. And it's a fact that the one currency will devalue over time against the other currency. And on average, for the last 30 years, the rand is devalued by 6% year on year against the dollar. So, am I a wizard? Do I have a crystal ball? And can I say to you, should you invest today or should you invest in 6 months? I'm not a wizard. But what the maths tells me and what the models tell me is that when I'm making a decision, and I'm always making a decision, by the way, because I own very few assets in South Africa and very few rands, where will it be in 5 years' time? And if you think that the rand will be less than 18 rand to the dollar in 5 years' time, then I would wait. If you think the rand will be more than 18 rand to the dollar in 5 years' time, then I would get started. Now, don't take my opinion. Do not take this is not financial advice. This is what Scott Picken does. Because you're taking a 5-year view on a good quality investment. You need to look at that investment and say, does this investment make sense? Do I think that it will get me the income that I want, the capital growth that I seek? Will it protect my capital? Will it give me peace of mind? Is it a plan B? And if it ticks all those boxes, then I wouldn't try and be a currency expert. I would look at the long-term trends. That's a very long answer to your short question, Fritz, but what do you think?
Yeah, thank you. I think it comes down to a large extent, as you said, what your outlook is individually, and also just getting to a point where you're actually, doing the effort to take a step and actually get going, get active, making a decision. I think that's the most important thing. And I think for us, everyone that's joined tonight, you're already going in the right direction because you're already informing yourself, you're already educating yourself, and that's the first step, taking that step. So thank you, Scott. Thanks for explaining this to us.
And again, it's so interesting you said that, Fritz, because I bought my first property when I was 22. I went to London when I was 21, and I've never earned rands ever, not once in my life. And I can promise you that when you earn your first foreign currency, it's a very good drug. So you can sit on your hands and you can make excuses for as long as you want. And I guarantee you there'll be an excuse in a year's time as to why you shouldn't get started.
I actually started my, I've been with the company for, I think it's almost, well, it must be 4 or 5 months now. So I'm quite new, but, and I'm 25 years old. So I think most of us can agree that at 25, money doesn't grow on trees. But this morning when I saw the wallet going live, I was so excited. I decided today is the day that I make this decision. And I actually started to fund my wallet. So I can't wait to see my first dollar appear in my bank account, and then I don't have to worry about the depreciation of the rand anymore.
Just a matter of interest, this is $100. Do you know what this is made out of?
Paper?
Yeah, and what does paper come from?
Trees.
Just a bit of fun for Wednesday night. So, but well done, Fritz. That's awesome, because getting started is the most important thing you need to do. There's nothing more difficult than getting started. And in the old days, what was so interesting, because let's come back to real life examples. In the old days, this gentleman, and I wish I could tell you his name, but I'm not going to. I wish I could tell you his property brand, because you would be blown away. But this gentleman in October 2012, at 886, buying a property for $95,000, didn't do it. Now, I know for a fact that he still hasn't invested overseas, because I know him quite well. And every time I meet him, I rip him off about the story. And he still hasn't done anything about it. And now the rand is at 18 rand. I mean, it's more than doubled. And by the way, this property is probably worth $150,000 or more. And he would have earned 8% at least cash on cash return over the last, whatever, 6-7 years. So what has procrastination cost him? And that's my challenge to everybody, is that the excuses we come up with are amazing, but what does it cost us long term? Next question.
Yeah, thanks, Scott. Thank you very much for that. That's exactly, a lot of my clients are exactly asking me the same question. Is they've got analysis paralysis. They're not sure what to do next. And I think you've given a lot of insight just using the facts, not opinions, but the facts of what it could mean. I have a very interesting, just 2 questions that is, where do we find our sponsors, and what kind of due diligence do we do on them, and why do we use them? I mean, there's thousands of sponsors out there, but why do we choose to work with the ones that we currently have?
So we've been helping people invest internationally now for 22 years. And in simple terms, the way we do it, I mean, look, I'm going to go through this in a lot more detail tomorrow night. But let me pull up something for you quickly. So we created a system called GIDS, which is a global investment due diligence system, and we've got it both for residential and we've got GIDS 2.0 for commercial. Now, I'm not going to bore you with all these details. I just want to go and find the specific slides that I was looking for. And actually, that's where I first met Clem Sunter with his scenario planning. I watched him talk for about 5 years, and I decided to build a model, a 4-dimensional model based on his scenario planning, like what you've just seen tonight, where I could make it fairly simple to be able to discuss the different systems. And my logic was, you know, if Clem Sunter is giving me these different scenarios, now you guys might be too young to know who Clem Sunter was, but he's the CEO of Anglo American. He was a massive heavyweight in Codesa. And what was really interesting is that he's also one of the top 5 scenario planners around the world. I mean, he's literally consulted to the Chinese government, etc. And what we realized was that going all over the world is pretty difficult. You know, you say you want to invest all over the world, that's great. Where do you start? Which countries do you start in? So what becomes more important to your question, Alex, is not how do we find the sponsor? Because you have to go higher than that. You have to start off with which country do you go to. So we decided to start in England, Australia, America for a number of reasons. The first reason is that I or one of my partners had been investing in one of those countries for a couple of years, a long time already, if that makes sense. Secondly, they were English speaking. So, you know, we could talk to someone without going through a translator. Thirdly, they worked on pretty much the old English law of property. Now, you'd be amazed. I mean, property and the language in Australia, England, South Africa, and America are like 4 completely different countries with the way they talk about it. Settle, transfer, complete. It's all the same stuff, but different words in different countries. And so what we realized was that in all those countries, we could understand what worked. The next thing was we wanted countries where the rules of the property owner were protected. So the last thing you want to do is take your money out of China, India, South Africa, and put it into a country and suddenly you don't own the asset. Whereas in England, Australia, and America, you've got very good legal systems to protect your asset. The next thing is, along with the legal system, you had to have a good banking system. You had to be able to get credit so that you could leverage your assets, etc. Then we had to dial it down and ultimately come down to, where's the system gone now? Why am I battling to find it? Here it is. So there you had Clem Santa, and you had to dial it down into which country were you going to go after. So this is where we took into account the scenario planning, and also where we took into account all the currency stuff that we've just been speaking about. Ironically, everything feels like it's ad hoc, but it's not. It all comes together. All the different facts from the different countries. You know, you should be looking at the fundamentals. You've got the different sources on how to find the right information, both in residential and commercial, in England, Australia, America, and South Africa. You combine all those facts together, and it gives you your global property system. Okay, so you now get down to a macro analysis of which country to go to, like to even start off with, based on risk and return. And it's not always the same. So someone who tells you London's a great place to invest, not always. There's good times to invest and there's bad times, like any other market, any other country. Then you start looking at actually, then you get to partners, because now you go micro. Now you get to cities. So you get to cities and sectors. So in America, as an example, which cities do you want to be in? So we decided, well, we didn't want to be in what they call the blue states, which are California, New York, etc. Why? Because they protect property, they protect the tenant rights. You can't get rid of tenants. We wanted to be in the capitalist states. They call them the red states, Atlanta, Texas, etc. Because they had much better property ownership, lower state taxes, so you had much better returns. We also wanted to be in sectors. We wanted to be in medical. We wanted to be in multifamily. And when we got those sectors, we then went and looked for partners. And then when we got to partners, we looked for 3 things in partners. We looked for them to have a 10-year track record in the specific sector that they're actually in. So we don't want them running a grocery store on the week, and on the weekend they're trying to be a property developer. Got no interest in that. Secondly, they need to be, firstly, 10-year track record. Why 10 years? We wanted to know how they performed in the last crash. People think they invest in property. They don't. They invest in partners. And good partners with good track record. Remember what I read earlier about entrepreneurs? Times will change, markets will change, economies will change. It's not a case of if, it's a case of when. So you need to have partners that they know how to navigate those changes. And so for us, it's a 10-year track record. It's a specific niche focus. And then the third one, and the most important one, is do they put their own money into a deal? Now, you might be putting $5 million into a deal, and they might only put in $200,000 or $300,000. As a percentage, it looks like only 2 or 3% of the deal, but often it's more money than everyone else is putting in on their own. And so our core principle of trust, transparency, and alignment, if they've got $200,000 in the deal at the exact same terms and conditions as you and I and the investors have, then we're all aligned in the same deal. If they've gone and raised debt and signed personal surety against the loan, then they are very aligned to making that deal work. If they've got penalty clauses in there that should they not deliver, the first capital call comes from them before it comes from the investor, then they are much more aligned to the project. And to answer your question, Alex, those 3 questions alone get rid of 95% of the suppliers, because most suppliers want us to bring all the money, take all the risk, and if they make a profit, they take 50% of the upside, but none of the downside. So that's where we start. And that gets rid of 95% of players because they don't want to play by the rules, okay? Then we get down to the 5%, and then it's about doing due diligence on them. It's about doing due diligence on the company, whether they've got any bad actors. So a bad actor is, have they been sued for fraud, or do they have any criminal activity against them, or anything like that, which is pretty easy again in England, Australia, America, because it's all online, it's all digital. And we go to a huge length to actually credit the partner, to do due diligence on the partner. Our attitude, rightly or wrongly, is that once you've agreed a good partner, take Crestwood in London, who are we to sit around as a bunch of South Africans sitting in South Africa? I don't care how many years experience we've got, to suddenly be an expert on the London property market and to tell someone in London what is a good deal and what is a bad deal. And so we do due diligence much more on the partner than on the property, because once a partner has passed the partner test, we have to work with them to assume that they're doing good due diligence on the property. We're getting a mortgage from the bank, so that the bank is also doing a due diligence on the property, and we are doing a due diligence, which is what you finally got here with multi-layered systems, the financial research, etc., etc. And so it's a multifaceted 10-layer system, which ultimately comes through into GIDS. And for those of you that are on the different courses, we talk a little bit about GIDS. Now, you can go and read about GIDS. It's all in my book. You can go and, if Alex and Fritz and David don't have it, there's a whole bunch of material here, which we've got under our systems, which I don't even know if people have seen before, but it's all here. We've actually got the whole GIDS process. So you can go and read all about it. You can go read, all about the process, how it's set up, the GIDS system, what we do for investors, etc., etc., etc. And or you can watch the videos, and or like when you catch Uber, you don't care how the algorithms work. You just care about getting there safely and simply. I'm sorry that I'm answering these questions in detail, but I think it's worth it.
No, Scott, I think you hit the nail on the head there. You added a lot of value. And a lot of clients exactly want to understand that process that you've just gone through. They want to understand what due diligence has been done on it, as well as what's been the step taken to achieve, to list their properties on our platform. And I think, thank you very much for that. Just a last question that I have that comes to mind.
Before we go to the next question, I get asked all the time, why don't we have 100 properties on the platform? And the logic is that when you're investing overseas, safety is your number one thing. Wealth protection is your number one thing. And so what we mean by that is that, you would rather go to if you're going to a grocery store, you'd rather go to a grocery store that has great quality and less selection than going to a flea market that has plenty of quantity but no quality. Because at a flea market, we all know we might be able to pick up a discount, but we can also pick up a lot of rubbish. And so we've got less quantity and more quality versus a huge amount of selection. Yet it's still very good to have diversity, so that you can diversify across asset classes, countries, currencies, and partners.
Agreed. The last question that I have is, so we've looked at the different options in terms of putting your money in now, putting in later, waiting for the rand, etc., etc. But what is the risk? I mean, what is the worst that can happen? And how safe is my money? That is quite a common question. Like, let's say worst case scenario, the property doesn't do well. What happens in a case like that?
So let's look at a couple of worst case scenarios. So the worst case scenario, if the 4 of us went and bought a property and we got a mortgage on the property, and we got foreclosed on by the bank, what could happen with the 4 of us is, let's say we'd each put in 100,000. It doesn't matter what currency. Let's say we each put in 100,000, which meant we had 400,000 and we got 600,000 from the bank. Are you with me? And we bought something worth $1 million. Doesn't matter what currency. Our worst case scenario is that the bank forecloses on it because interest rates go up or the tenant doesn't pay and we can't afford to pay the mortgage, and so we get foreclosed on. Our worst case scenario is we'd lose all our capital. So we'd lose our 100,000 and we might still owe 600,000 to the bank. So the bank would come after us for personal surety. That is what happens if 4 individuals buy a property. If the 4 of us bought it, that is the worst case scenario that you deal with when buying property. In this situation, it's not that. In this situation, when we get any debt, it's called non-recourse debt. So the first thing that's important is the worst case scenario. The absolute worst case scenario is you can lose your capital, but you can't have further liability based on the mortgage or any other liabilities because it's ring-fenced purely to your capital. Secondly, with regards to property, this is not the stock market and it's not a cryptocurrency. Property do not go to naught, ever. Okay? And you only lose money in property if you sell. So what's important is that, like the deal we've got in Australia at the moment, we haven't lost any money because we haven't sold. If we sold today, we would lose money. But if we hold it for a period of time, then we'll get back our capital and hopefully a profit as well. And so losing money in property is actually a matter of time. And as long as you're prepared to hold, then you'll get your capital back over time. And so what is a scenario? Well, you can lose time. You might have put your money in and think it was a 1 or 2 year deal. You end up having to hold for 5 years and you've lost time, but you haven't lost any money. The next thing is that if interest rates go up or if the tenants stop paying, then there can be a thing called a capital call, which is where you need more money. We protect against that because firstly, we overraise. So we make sure that we've got a certain amount of money that stays in the bank to protect against the capital call. We also like to fix interest rates, and we like to ensure that when we get a building, it's got multiple tenants, so multiple income streams, and there's basically what's called an interest coverage. So we like to look for 120 to 130%. So what that means is that your rent is covering your interest payment by 120 to 130%. So it's actually over covering it. And these are all things, Alex, that are taken into account when it comes to risk. However, in any deal you ever do, any investment, even putting money in your bank, has risk. Ask people that left money in the bank in Cyprus when the Cypriot government took 100,000 euros each. So you need to understand what those risks are. And that's why on the platform, we always go into, so I'll just log in quickly for people. And we actually highlight, so we work with the partner on the ground, the property partner, and we say, what are the main risks? And we highlight those risks right up front so that people can actually see what those risks are. Because every deal in the world has risks. So rather know what those risks are up front rather than being naive. And I'm just going to any one of them. So let's go into this aged care one in England. And you can see down here the risks. So
Scott, I just want to bring this up because it ties closely into what you're answering now. A lot of my clients have asked me the question of how the coronavirus situation is going to affect the tenants of these buildings. And I think it would be great for you to answer it in here because this is a good opportunity for that.
Yeah, so David, there's 2 ways I'd answer that. We've basically, any investments we've looked at, we've wanted to look for income resilient property to start off with. So medical as an example, in the last crash in America, residential properties lost anywhere from 40 to 70%, depending on how much, which city you lived in. And yet medical buildings, our partners on the ground there didn't lose 1 tenant. Okay, so if you don't lose a tenant, then it doesn't really matter what happens with capital values because you keep getting paid your income through the whole process. Now, as an example, some of our partners on the ground, the one in Atlanta and the one in Dallas, have signed up and have partnered with the government to be a COVID-19 hospital. So they're actually using it to their advantage, not the other way around. So, you know, look, is COVID-19 a new phenomenon that people have never experienced before? Yes, definitely. But medical is something that stands the test of time. Aged care in England. You know, could COVID-19 unfortunately kill a number of old people? Yes, it could. But England's an old age home, and one of their biggest problems is supply and demand. And they've got a very limited supply of aged care facilities and frail care facilities. And so, you know, these are government tenants with government lets. And, you know, whether it's coronavirus or Brexit, they're not going to be kicking their old people onto the streets. Multifamily is a very economically resilient asset class in America as well. And it's, you know, is it going to get impacted? It could. You know, people don't have jobs and they can't pay their rent. It could have an impact. But the government is also one of the biggest funders of mortgages in multifamily. It's got Fannie Mae and Fannie Mac, and there's a whole bunch of concessions, and interest rates are fixed. And what's interesting is that they're even coming down. So, you know, I believe that you've got to find for multiple income streams, you've got to find deals that have multiple income streams that are economically resilient. Another good one, which we haven't invested in yet, but I would love to. Imagine being able to own an Amazon logistics warehouse. You know, like you've got to look at assets that are being future-proofed by where the world is going. And, you know, multifamily, medical, aged care, London residential for middle-class London people, you know, everyone needs homes to live in. Now, would I be scared if we owned office blocks or holiday resorts or, you know, too many new developments? Yes, because I think that'd be impacted badly in certainly the short term.
But that's a good place for me to ask a question from one of my favorite clients, Bulelani. He asked that, okay, with the market having been hit so hard and the correction looking like it's taken place with the bottoming out we've seen, is this a good entry point for things such as REITs in South Africa, example, Growthpoint or opaque, I believe is how it's pronounced. So
Exactly.
my thought process is just from my side, Bulelani, is I would firstly look at the weighting in terms of the assets that they own, and specifically offices, such as Scott said. I think the consensus is that office you know, space is sort of an underperforming asset class at the moment, and that's my thoughts. I've also been trying to bottom troll the market at the moment, and I do know that Growthpoint and Redefine Properties and properties companies similar to those are at the moment, you know, they've taken a huge knock. So that's the first thing that I would look for is what the ownership is in terms of different types of classes of residential of property, and specifically office buildings. Well, yeah.
So what's interesting is that people can get, you know, really, really clever with looking at net asset value and looking at yields and looking at, well, technically I'm getting it at a discount. The best way I'd describe it is, I think you said, Voliani, is that a property fund or a REIT, a real estate, sorry, I don't know why my camera looks like it's snowing behind me. A property fund or a REIT has higher than a 70% correlation with the stock market, which is exactly why there's discounts to be had, because it's sentiment. Now, what's interesting is that two years ago, the sentiment was in the opposite direction. I was on TV, go and look at it. It's a CNBC interview. And I was with a financial planner, and he was saying to everyone how wonderful it was to buy Growthpoint shares because they doubled in price over the last year. And I said, but the problem is that it's more than $500 million, 500 million rand that they've lost in net asset value in the last 2 years. Yeah, but the share price has doubled. Well, who cares? Like, I'm sorry, it's like simple 101. If the net asset value is going down, then the share price will follow, because share price is based on sentiment, not on facts. And what was so interesting is that in that same year, the directors took a 36 million rand bonus. Now you had to find that on like page 36. You had to have an MBA with 13 qualified CAs to help you read the numbers. But when you read the numbers, the directors took a 36 million rand bonus. So I find that fascinating. They took a 36 million rand bonus to help you lose 500 million rand. So take the sentiment the other way. Well, you could say, well, they're trading low at the moment, so I could buy in at low prices. You could. I'll ask you a separate question though. On our medical portfolio for more than 6 years, and we've got over $200 million worth of medical in America, we've paid out people consistently 8% net cash on cash for 6 years. 8%. That's not capital growth, that's purely income. The medical REITs in America over the last 5 years have consistently paid out 4.75%. What's the difference? Are we cleverer? Did we go to better universities? Are we better negotiators? Are we better at managing tenants? None of the above. We just cut out the middlemen. We don't have 27 MBAs, 400 accountants, 600 management agents, and a whole layer of fees all the way through the process that takes your 8% and dilutes it to 4.75%, and they all make the money while you sit there battling to beat inflation. So is it a discount? Yes, probably. But just because a horse, no, I've got to be very careful about what I say here. Yeah, just because something's good value, you could go to Memphis right now and you could buy properties, sorry, not Memphis, Detroit. You could buy properties at a 50% discount. Is it a discount if it's never coming back?
Yeah, that's true. I guess
I
it comes
to know what I'm investing in, Fritz. I prefer to know that I'm investing in this deal with this partner, with this return. I put my money in. I know it's ring fenced. I know what the fees are. I know what people are earning. My money's protected. I can see it, touch it, blah, blah, blah. I'm in control. And you know, the other thing is I want to pay a transaction fee. I'm happy to pay someone fees for doing work, but I don't want to charge them an assets under management fee. Now, what does that mean? Well, in Airbnb, when you rent out a house on Airbnb, you pay a transaction fee. But in the financial industry, you pay an assets under management, which basically means they get paid to look after the assets, whether they're going up or down. And that's like renting out an Airbnb house and they charge you a monthly rent, whether they make you money or not. Whereas that's not the way it works. Airbnb only make money when they make you money. And I think financially investing should be the same. So coming back to Vulyani's question, do you want to catch a yellow taxi cab or do you want to catch Uber? They're both cars.
Great, thank you, Scott. Vulyani says he's happy.
Sorry for being direct, but I was doing it for everyone else as well.
Alrighty.
Alex, I'd like to, I'm conscious of the time here. I'd like to look at that client of yours that sent through a financial product and asked us for questions around the financial product.
Sure. No problem. I'll quickly get it up. I'm not too sure. Are you going to, do you want me to send it to you or do you want me to share the screen?
Let's share the screen with yourself. So you should be able to share your screen now.
So can you see my screen right now?
Yes.
Okay, great. So yeah, this was linked to one of my clients. Scott, I believe that you've seen this before.
Yeah. So you guys asked me to go through this, and in simple terms, I'll just tell you to go up or down if you don't mind. This is just a typical financial product. You can see here the initial investment was 4 million rand, and you can see the combined return was 739. So they were looking at making 739. It was a 5-year investment. If you just keep going down, please. It was going to be broken up into an income plan and like an annuity thing. Their portfolio, I don't know, they had all these fancy terms. Anyway, I went through it. Yep, if you keep going. You can see that the paid out amount was 23,800 rand. That's 24,000 rand basically, which is a net fixed return of 6.86%. Okay, if you keep going. Okay, notice we're on page like 2 now or something. Okay, there all the fees are. Look at the fees. They're all the way through the process. So what they're very good at is 1.5 here, 1.4 there, 0.75 here, 1.5 there, 2 point there. Add that all up, it's 5%. Okay, keep going. Okay, there all the fees are spread out over the years. Okay, just sorry, go back to that. Because you notice how these things like to get hidden down on page 6 or 7. That table with the fees, where was that table? There it is. So you look at all the table of fees, 3.9, 1.3, 0.78, 0.78. That's every year, by the way. Okay, so anyway, keep going. Now these fees are getting charged whether your investment's going up or down. It's irrelevant. Okay, and I think that's, if you just keep going, I think that's probably everything.
Yeah.
So what's interesting here as well is that you get your 23,000 Rand per month, and then you get your capital back at the end of it with no upside. So you just get your capital back. Okay, so you get your capital back in 5 years, and you get your 23,000 Rand a month. Okay, so my point being, I'm going to steal the screen back now, is that I actually got sent one of these things a couple of years ago by my father-in-law, and same thing. I'm not a financial advisor, and I'm not giving financial advice. I just like to do the modeling myself, and what would it mean to me? So I went in and I literally put in the numbers, and literally using the exact same numbers that we've just seen. So I worked on 17.5 because when I was given that proposal, it was 17.5. And I said, if you bought that in dollars at an 8% return, it would be basically making you 23,000 Rand. So basically the exact same amount of money. And you could invest in 3 different deals. So you'd be diversified because you're investing in 3 different deals. And that's just purely the income. You could live off the income. And oh, sorry, no, what have I done here? She was getting 23,000 Rand in that financial instrument. If she invested her money at an 8% cash on cash return, in monthly it would be 26,000 Rand. So what I found fascinating is that by investing in 3 separate deals diversified across asset classes, countries, and currencies, she would actually be better off monthly, and she would have her capital at the end, plus she'd be getting capital growth. Whereas on the product I just showed you, she would literally be getting her capital back with no capital growth and her 23,000, okay, per month. Then I said to her, if you wait 4 years until you're 65 and you actually invest that money, because you don't need that money every month until you're 65, but you want 30,000, a month, then you would reinvest that money, plus you would get the capital growth. You would now have 400,000 after the end of 5 years, $400,000, and that would equal 46,000 Rand. Okay, so now you've got your capital back, plus you got the capital growth, plus you got the income. You've reinvested it, and now you're at 46,000. And then I said, if you waited till you were 70, what would it actually mean in terms of the capital? Then we went to the freedom calculator, which we've already been through tonight. And on this graph, I literally, rather than leave your money in the bank, I put in there 7.39%, which is exactly the return she's getting, the net return pre-tax. So I'm comparing literally an apple for an apple. And I went and compared it again on that graph. Where's my graph gone? There it is. And I just said, okay, well, let's compare an apple with an apple. And if you put it in that product, by the end of the term, you would have started with, what did we say, $227,000, I think. Sorry, I don't know why my computer's so slow. You would have started with $228,000, call it 230 to be exact. And after the time, you would have, if you stayed in that financial product, you would have 330, call it $110,000 more. If you invest in a South African property, you'd be well better actually, but that's on good assumptions of South Africa. And if you just invest in one of the commercial properties, you'd be 3 or 4 times better off. And so all that I said when we went through the analysis was, look, I'm not a financial planner. I'm not giving you financial advice. But if I just look at this like for like, apple for apple, take away all the fees and everything else, what are you asking for? Stable income. Well, why can you not get an asset, and after 5 years, even if you die, you can pass on that asset to your children and they can continue to earn the passive income. You're not diluting the capital and you're getting the upside. And pretty much what I've learned, which I didn't even know until a year ago, what are the banks doing? Well, they're taking the money, the 4 million rand, they're investing it in a structured note of some sort of thing. They're getting paid a return. You know that at Cashbox, we can pay people 8% return at the moment, where there's no upside on capital. And that's exactly what they're doing. Okay, the only difference is they're doing it in rands, whereas we can get you 8% fixed return in US dollars. And my point being is that so doing it, you basically are hedging yourself to the rand. You like, no matter what happens to the rand, you're hedging yourself to the rand. It's not going up by inflation. So if your 23,000 rand, like if the rand goes to 30 rand to the dollar, you're still getting 23,000 rand a month. Whereas if I go back to this, if the rand goes to 30 rand to the dollar, you're getting $1,500 a month. Whatever the rand exchange rate is, it's better off. Okay, you're protecting your capital and you're getting your income. So I don't know. I mean, Alex, I could preach about this for 2 hours, but for me, when I looked at this, it was like, doesn't make any sense to me, other than for the financial planner that's making him or her wealthy.
Scott, a quick question there. This model doesn't take into account the annual depreciation of the rand over the long term, does it?
This one didn't, because this was just a simple model. This one did. When I did the freedom calculator, it actually did take it into account, but only for if you left your money in the bank. So you can see the rand devaluation factor there.
All right.
So it worked on the long-term average of 6%. I think you have to compare an apple with an apple. If you're putting your money into South Africa and the rand is devaluing over time, you know, $100,000 10 years ago and $100,000 today are two completely different things.
Yeah, that's why I asked, because it's such a big factor. Yeah,
which is why, again, you know, yes, the rand has blown out in the last 2 months, and we all should have got it out at 14.50. You know, hindsight's bloody brilliant. But the interesting thing is, we were having webinars like this 3 months ago, and it was 14.50, and everyone told me it was going to be 12. Now, I'm not saying it won't get back to 15, but I've shown you the scenario planning. It still doesn't make sense. Any other questions, guys? What about people online? Let's check online quickly if there's anything. I love these sessions, by the way. I love being able to jump around and answer questions and see where we're at.
I've actually got another one from one of my clients, Gideon. He said, could you explain a bit about in what entity is the property purchased, and how do the investors own shares in the property?
Okay, I wish I had a whiteboard here and I could draw you a picture. I'm going to try something. I'm going to have a bit of fun. You can see we've got our quarterly debrief tomorrow. Okay, right, let's do an annotation here. Now you can see I'm having fun. Okay, so this is your house over here. And again, if the four of us were going to buy this house, we would basically set up an LLC, or sorry, not an LLC, an SPV. So no matter what country we bought it in, sorry, my drawing with a mouse leaves a little bit to be desired, but anyway. But it would be an SPV. So SPV stands for Special Purpose Vehicle, and that would be, in any country it's different. In America it's an LLC, in South Africa it might be a PTY Limited, in England it's an LLP, etc. And if the four of us were going to buy this property, there would be the four of us here, And if we put in equal money, we would expect the four of us to earn, oops, sorry, interesting picture for that person. You can see why I didn't do art at school. You know, you got the four of us now, okay? And the four of us would expect to own 25% of that SPV each if we put in 25% of the capital. So let's say we need 100,000, whatever, or no, let's use the same example we used. So we need 1 million, we're putting in 100,000 each. We would effectively each own 25% of that SPV. That SPV would own 100% of the property. Okay, so basically that means that we would own 25% each of the property. You with me so far? We would get a bank involved, and that bank would put in 60% of the cash, okay? And we would have to agree how we're going to sign surety and stuff for that. And we would also have to agree who's going to manage the property. So I'm just going to put it here, manage, like that, okay? And lastly, we would have to agree how long we're going to own the property for. So let's just say we're going to own it for 5 years, the four of us, okay? That's basically the way properties have been done all over the world for centuries. All that we've done is that we've come along, and I don't know how to change the color of my pen, but
it's okay, Scott. Pink is okay. It's your favorite color. It's all right.
Well, anyway, all that we've done is come along and put technology on the top. So this thing at the top here is technology, so that people basically don't have to know, like, and trust each other to be able to participate. Okay, now, why is that important? To come back to, I forget the person's name that asked the question, was that when they're investing, if they're investing 10% of the deal, they own 10% of the SPV that owns 100% of the asset. Therefore, they own 10% of the income, they own 10% of the capital growth. And the reason that we like doing it in England, Australia, and America is that it's all digital, it's all online. This SPV is registered in England and America, Australia, so that people can actually see what their ownership is on the certificate, and then they can equally see that this property is owned by that SPV. So there's complete transparency through the process. Did I answer the question, Fritz? There was a second half to your question. I want to make sure I answered it.
This answers everything. Gideon says it's great. He understands. Thank you.
I hope Gideon enjoyed my grade R picture.
It's actually not too bad.
I give it 5 points out of 10.
I'll take a photo and I'll send it to all my clients.
Okay, so let's look through here. What questions do we have in terms of, I can see we're at 8:30 already. Right, so we'd like to get access to the wealth calculator. Sure you would, Wayne. We're going to be bringing it out. It'll be part of our wealth GPS for our wealth in the circle, and it will be becoming available. Plus downgrade, plus add cost of borrowing. Yep, so that's all around the Freedom Calculator. Can we get a copy of Scott's scenario planning spreadsheet? Do you share your spreadsheets? I'm starting to notice a trend here. But does the high interest rate in South Africa on a mortgage take you out to negative on the potential return, Scott? Can you clarify that, please? Yes and no, Emma. I think the important part is you need to do the modeling. So it depends. You'll see there that I had a cost of capital at 9 or 10%. You need to put in the cost of capital, and obviously you've got to have an income producing asset where the passive income is more than the cost of capital. What most of our clients do, including me, is I would rather pay the Rand mortgage amount. I don't bring money home from overseas, which means I'm actually growing my offshore asset and I'm paying off the local debt, and I basically do the arbitrage. Lee, I sent a question at 1 o'clock webinar, but had network problems and did not see or hear the response about investing in deals in a normal way, pledging and sending money to the new wallet account. I think Lee's answered that. If not, Lee, if someone could reach out to Diana Katsky one-to-one and help her with the process. Any chance of having a copy? Sorry, yep.
we have already, Diana and I have been chatting in the background, and she is all sorted and understands it. But just going to your previous answer to Emma, this leads firmly into it. We've got another question that says, if my home is fully paid off, will it make sense to take a loan of, say, 200,000 Rand and invest that in the US through your platform and use my home as collateral?
So it's a great question, and the answer is I don't know. And the reason is why I say I don't know is we don't give financial advice, so we don't tell you what to do. What would I do in that situation, or what would I do if my mother asked me for advice, is I would do the modeling. And being from Zimbabwe, I know that in Zimbabwe, the first thing that they took were the properties that were fully paid for. So depending on your situation, your home, and again, this is why I'm not giving you advice because I don't have enough detail, but your home is your home. Your home and an investment are two different things. To have the peace of mind of knowing that your home is paid off is very important for people. However, if you've got a lot of equity in your property, then you literally need to go back to this modeling here, and you need to understand that leaving your money in the bank is no different to leaving money at an 8 or 9 or even 10% return. It's the same thing, because that 200,000, if you took it out and put it into first world assets and a first world income, what would it mean to you? So you need to be able to make that decision based on what is right for you. My attitude for the last 20 years, rightly or wrongly, has been to accumulate as many first world assets and first world income as physically possible. And anyone and whichever bank would be prepared to help me do that, thank you.
Thanks, Scott. We've got another question here from Heidi. She wants to know how well the legal political system in the UK is protecting property owners. I think that comes off the back of the different states in the US having different deals with regards to whether they protect landlords or protect tenants.
Yeah, so I'm just trying to erase my pretty drawings here. So I think what's important there is that, again, you can't talk holistically. You need to, you've got to get more specific. You've got to get down to sector and which sector and where you look. I know in England that they have pretty solid rules around not being able to evict tenants if they don't pay. Touch wood, my experience, if you deal in the right quality caliber, I like to look at B grade areas. We've never had a problem, and I've been investing there since 2002. Is the law there to protect the homeowner? Very much so. I mean, that's why England's the bastion of wealth and has been for centuries. However, saying that, if you go and do it on your own and you don't know what you're doing and you're trying to deal with one tenant, probably a lot more risk. There's a reason that when birds fly in a flock, they fly together, because they can fly 70% further. So my attitude with it, someone like Lauren, if you're talking residential property, she's got nearly 100 properties under management. She owns 30 of them herself. Why not just partner with someone like that? Our investors that bought that London deal today, I don't know how many of them are in the deal, but however many of them are in it. We bought a a building with 3 flats. That's 3 separate rental income streams. Lauren's there, she's on the ground. That's what she does. If we have a problem with a tenant, she'll figure it out. That's simple.
Thanks, Scott. How can you guarantee the 8% yield?
We can't.
I think there we go.
We can't. So when it comes to property, we're not a bank. We're not giving you guarantees. But what you can look at is there are some deals where there's 2 debt deals where, as an example, the aged care, it is actually a guaranteed 10% return because they're actually earning quite a lot higher than that returns. And so they guarantee the 10% and they're taking the upside. And from your perspective, that's something you can take into account. Obviously, whenever there's a guarantee, you also need to see who and how strong the people are behind the guarantee. Because there's those famous things in Dubai where they gave you rental guarantees at 15% because the developer just put it onto the price, and then at the end of the 2 years it went from 15% to 5%. So make sure they're market related. We are not, we're not in that game. We're helping you invest in quality commercial assets with good income streams. Things happen. Not everyone's going to work. And so if you had $100,000, don't invest $100,000 in one deal. Invest $10,000 in 10 deals. And if 9 of them work and 1 of them doesn't, it's not going to impact you too badly.
Thanks, Scott. Kason has joined us from the US. So welcome. They want to know, they're a US citizen in the US, but our website is not, they're not able to participate at the moment. Is this going to change, or is it just not possible due to regulations?
Well, it's 8:30 at night, so I'm going to give the humorous answer. So it was 2014 and I was in New York, and one of the top venture capitalists in America was interviewing us on a panel. And he basically said that when America sneezes, the rest of the world catches a cold. So why would he want to invest anywhere else outside of America? And my joke at the moment is now that the rest of the world has sneezed and America seems to have caught the cold. But anyway, that's my own little bit of humor. Obviously, we want to help Americans. It is where we're going from an SEC regulation. And there's me. That's karma. But from an SEC perspective, you've got to have 2 different platforms, one for Americans and one for the rest of the world. And so our focus has always been to focus on people in emerging markets, China, India, Africa, etc. It is coming. We will do it. But it's actually just a tech time that takes time. We've got to build out the ability. Saying that, a number of our partners do have solutions for Americans. And I'm a big believer we can always, where there's a will, there's a way. But at the moment, I know in terms of our SEC regulations, we're not allowed to help Americans invest directly through our platform. The last thing I would say is that there's nothing stopping them participate from any of the education perspective, and we could help them invest directly into some of the partner deals on the ground. But yes, it's a frustration for me. If I could click my fingers and help Americans tomorrow morning, I would. It's just purely been a funding, not funding, a capacity thing.
Thanks. Cliff came on, thanks for the compliments. I'm sure this has to do purely with your drawing skills, Scott, and said, this right here is what separates Scott's webinars from all the others.
What, the ability that I can draw 2-year-old pictures?
Exactly. We've got a message here from Derek.
Just on that note, if people have enjoyed tonight, please give us feedback, because normally Lee asks, for us to come up with a topic, and I try to put a topic together, and it's a one-way conversation. I've actually had fun tonight, and I don't know about everyone else, but like we said, there was no pre-planning. I didn't know what Alex, Fritz, or David were going to ask, or you, Lee. But then we've got to be able to improvise and draw funny little pictures to answer questions. I'll definitely figure out how to improve that.
Awesome. We've got a message here that says, I've been speaking to a number of multifamily operators in the past few weeks in the US. The interesting thing is that their tenants are also receiving $1,200 per person per adult and $300 per child. So a couple with 2 kids are getting this is more than enough to cover their usual rent of approximately $1,500 and still have money left over. Their default on the 1st of April was above 10%. This is up only slightly from the usual 5%. So that's interesting from what's happening in the US at the moment.
At the end of the day, I can't guarantee anything that's going to happen. Every time you have a crash, no one ever really knows. But I always think you go back to fundamentals and basics, and people need places to live. And particularly if it was expensive holiday homes or big mansions in Florida, the government doesn't run in and help those. But when it comes to multifamily and lower to middle income housing, it's basically affordable housing. That's where they have to step in. It's that simple.
It's just something, Scott, that I would like to mention as well, and my clients that are online now would definitely recognize this, because I've been going on about this for so long now. I mean, not too long, but the last 2 weeks. I've been exposed to a book called The Perfect Investment by an author, Paul Moore. And that's something that I've been sort of pushing my clients to listen to it. It's on Audible. It takes about 3 hours to listen to, and if anyone has time now, and you want to get a good understanding of the multifamily space in the US and how well it performs during up and down swings in the economy, then that really is something to look at. It's certainly been an eye-opener for me.
No, excellent. Thanks, Fritz. Listen, just while we're doing these final Q&As, I'm going to be putting up some polls. It's always interesting for us to know what people are interested in. It's, you know, it's not right, it's not wrong, it's just your opinion. It gives us indication of what people are interested in, etc. Please go ahead and fill in the polls and interact, etc. We'd really appreciate it. And also, the more we understand what you're looking for, the more we can help you achieve it. So I'm just going to put up a number of polls while we're going through these questions.
Thanks.
And you're not missing anything on the slides. I don't have anything on the slides at the moment.
We've got a question here that says, do you expect there to be a few really exceptional deals coming out of the market in the next year or so because of COVID? Will you be making these available to on the Wealth Migrate platform?
In 2009, I saw deals like I've never seen before. Some of you have heard, and I'll talk about it tomorrow night, in Wimbledon, where there were 48 units. I could buy them for 50 cents, you know, on cost of replacement. So I could basically buy, it was about a £320,000 unit that I could buy for 160. It was fully furnished, fully tenanted with a 12% net yield. And my only problem was I needed £10 million. I couldn't get £10 million together, and we lost that deal. I tried to buy one unit on my own, and the developer laughed me out the door. Today, those properties are worth nearly £1 million each. And what's really interesting is that it created so much pain that's why we got Wealth Migrate today. Because we wanted to bring people together, so we had the buying power of institutions to be able to take down good opportunities. Do we think there's going to be good deals? I have no doubt in my mind that there's going to be good deals. The question is, are investors going to be able to be ready? Are they going to be able to act fast? And are they going to have the right mentality? Because what I learned in the last crash was when most people run away scared and don't take advantage of good opportunities, and 3 years later go, geez, I should have taken, you know, advantage of that. And that will be the question. And that's one of the reasons why, and I'm going to put up a quick another poll here. What we're working on is actually a blended product, which is where investors will be able to participate in a multiple product where they can be involved in a medical building, an aged care building, a fixed income product, which is taking advantage of the stock market at the moment, but getting a fixed income, and a private equity investment where they're a shareholder in the Wealth Migrate platform. And it's a blended product. So you're protecting your capital on the downside, you're earning an income return, and you've got all the potential upside, you know, should platforms like Wealth Migrate take off. And so, you know, to answer the question in more detail, you know, are people interested in this? Because these are, we're looking at putting together an opportunity in the region of about $20 million to be able to go. The bad name that I want to call it, but no one else wants to call it that, is a vulture fund, which is basically where the vultures go in and take advantage.
Thanks, Scott. You've previously mentioned that one can generate $15,000 per month passive income. How much would one have to invest to get this type of return?
3 hours. Do you know what I mean? I wish I could see your face right now.
Have no clue.
All you got to do is come on the real estate masterclass tomorrow night for 3 hours, and I'll show it.
There we go, Susan. So I hope you've signed up for our real estate masterclass tomorrow night.
But on serious note, I'll share tomorrow night how you can start with $100 and achieve the goal.
Okay. We've got a question here. A $1 investment option is great in the wallet, but I still need my family trust to be able to invest that money in the wallet. When will this be possible?
Lee, you're more intelligent than I am when it comes to these. Are we not able to? I didn't know.
So Cliff, just to let you know that if it is a South African trust cannot hold investments in foreign opportunities. So if you've set that up in South Africa, then unfortunately your family trust will not be able to invest. This is not something on our side, but actually exchange control rules for South Africa. If it is a internationally set up trust, it depends where it has been set up, and you'd actually have to get hold of your auditors around the trust and ask them if you are able to invest in an international and hold international equity.
And I think the only other thing there is we're working closely with Calio now. That is a family office that works with some of the wealthiest people in the world. And you know, if you're in that space, and you know, I'm not sure who's working with you, but one of the wealth consultants can assist you. You know, maybe go and chat to them. There's always a solution. Where there's a will, there's a way. What our way is not to figure out how to move money out of a South African trust overseas. That's what partners like Calio do. We help you invest it once you've got your money sorted.
Perfect. Just going through these. That looks to be all the questions that have come. Charles has put a message on here that he'd like to understand structured notes better. Charles, we do have a webinar that we conducted with our partner Cashbox on that. I will send the link to the recording through to you, and then any questions after that you can send through to us, and we can connect you with the guys from Cashbox to get those answered.
I see only 34% of you invested, so with the other 65, if you would mind, stop watching Corona TV or Facebook and let us know what you think. We'd appreciate it. No, but on the same side, yep.
I just want to add there, Lee, Charles, we can send you a video of a Cashbox offering, the first one that we had, and they go through a nice description of how it works and how your capital is protected and all of those types of things. So if you can just get your details, and we can share that with you.
Yeah, and I think Susan asked about the webinars. We do actually put all the webinars up. I think Lee could probably answer this better. I know we put them all up on YouTube and stuff, Lee, but if Suzanne wanted to see the webinars for the last couple of months, where would she find them all?
Yeah, they would be linked. If she's part of our inner circle, they will be on there, and if not, on our YouTube channel. Susan, I will send you a direct link to our YouTube channel so that you can view all of them there.
Perfect. And Pedro said here, I've applied for a wallet. Why is it taking so long? And what has to be done on your side? It only went live today, Pedro. And so we had to have full integration with BHP Paribas and the bank, which is one of the top 5 banks in the world. We had to have integration with the European and French regulator. It was really quite a complicated process. Now that we've done that holistically, we've got to do it at an individual level for everyone, you know, through KYC, et cetera, and you know, that obviously takes a little bit of time. If you noticed, when I logged into my own platform, I was also it said I couldn't invest in this deal yet because my wallets weren't sorted. So if you just bear with us over the next week or two, we'll be onboarding. We've got to onboard thousands of investors, but we'll certainly be doing it as fast as we can. A lot of people were asking about the models. We've actually been talking about that a lot internally because I've built a lot of models, you know, all our GID systems, our procrastination calculator, the freedom calculator, the GPS. There's a whole bunch of them, and including the IRR calculator and everything. And Richard has calculators as well. And what Richard and myself are doing, and I know, Lee, we've actually reached out to someone, because ideally we want to have them all built within the platform, but that will require more tech time. So we're looking to build it into certainly an Excel calculator at the moment. But the problem with these things is you need to make them user friendly. Like, I know how to use my spreadsheets, but you've got to make it really obvious and easy for people. So we are going to figure out a way to share it. I know that it is going to be part of the Wealth GPS and the inner circle and everything else. So it's certainly something that we're looking to do in the near future, but I don't think they're ready to be shared yet. What I would suggest, if you do want to look at something like that, chat with one of the wealth consultants, and they can help you take it through. Please understand that it's also not a perfect science. No calculator, no system is right. It just gives you an understanding of different options. It's never perfect. No calculator is ever perfect. It just gives you, it's better than a gut feel. And name for this is Scott's unique Q&A session. That's Kerry, thanks for that. I'd happily have names. Look, the whole idea with WealthE Wednesday was actually to do this more often, as in to literally have live Q&As. The challenge is it requires everyone to turn up and ask questions. But I think certainly you guys have done a great job tonight. Look, the time is nearly 9 o'clock. So what I'd like to do now is let's start pivoting. I've got 2 more questions to ask on the poll. Let's start pivoting to final comments. Lee, I'll let you have the last say. So let's go with Alex first, then Fritz, then David, to final comments, and then we will look to close out.
Cool, thanks, Scott. Yeah, so I think everyone enjoyed this webinar very much. I must say I had a lot of fun, and it was quite interesting and exciting to be part of the whole interaction state. Yeah, if there was any questions that we didn't get the time to go on, please feel free to reach out to all of us, and let's see how we can answer them and add value to you. And yeah, thanks for your time, and yeah, I'm looking forward to the next one.
Excellent, thanks, Alex.
Okay, so thank you to everyone for attending tonight and this afternoon. Thanks so much for engaging with us. I think we enjoy it when it's sort of a two-way conversation and not just a presentation, as Scott would always say. And I actually wanted to do this with my camera on, but now I see there's a poll. But for my clients out there with any questions, I'm waiting for you to come to me, and I'm ready to help you. So thank you. Enjoy your evening.
Excellent. Thank you, Fritz. David?
Great, yeah, thanks, guys. I just want to thank my clients as well for joining. I know they appreciated it a lot. And I got a few comments here. Thanks for your drawings, Scott. They really like those as well. So it's always good to hear that. And then also, if you guys do want to have any of those spreadsheets or documents, we can run through them together as well. So just pop me an email and I'm always available for you. Thanks, guys. Have a good night.
Excellent. And Lee?
Thanks everyone for joining us tonight. It was another very full session that we had, lots of information shared and lots of questions being asked. So thank you for spending tonight with us. We enjoyed sharing with you. I'm sure that there are more questions that will come up when you watch the recording or even that you're thinking of now. So as all the guys have said, please reach out to us. We're more than happy to help. And if you think that this could add value, please share our WealthE Wednesday series with anyone that you like. We're here to add value to people and to spread the news about how easy it actually is to invest overseas. So let us help you through that process. And just a reminder that tomorrow night we are running a 3-hour masterclass. If you'd like to join us, I did pop the registration link in the chat box, but again, if you've missed that, please reach out to us. We'd love to have you on board. We usually start our webinars at 7, but because of the 3 hours tomorrow, we are starting our webinar at 6 p.m. SA time. We look forward to seeing you guys online again tomorrow.
Yeah, no, thanks very much, Lee. And I've got it up the link that is there. You can see that it's starting at 6 p.m. And the idea tomorrow night, and hopefully Alex, Fritz, and David are up for it, and yourself, Lee, is to make it as interactive as possible in terms of what we tried to do tonight. I just want to show you some slides. So this is the link here. Why is my PowerPoint not coming up now? That's the link and as Lee said, she's put that through. I'm not going to do a whole conclusion, but what we are going to do tomorrow night is we will explain to you this, which is the 6 things that investors need to know: belief, knowledge, access to investment systems, support and accountability, and ultimately getting results. We will explain what the inner circle is. We will give access to people. Anyone that turns up will be getting access to the eWealth Pack, which has a huge amount of resources which are in it. We will also explain the starter pack, which is where you can literally get started from $100. And I think that's probably everything. We do have an investor strategy sheet, which I believe is always very valuable to fill in before you're meeting with one of the wealth consultants or with myself or whatever, because it helps us know what you're looking for. The next steps are pretty much here and easy for you to click on. But I remind you of why we did this webinar, and it's all about freedom. And hopefully tonight, if nothing else, as we're all in lockdown, this gave you the freedom to unlock your mind. And with unlocking your mind, you can unlock your freedom. I really encourage you to share this with others. We do have the masterclass tomorrow. It doesn't cost anything. I know everyone's so excited about Easter weekend, and you're all going to go out and meet all your friends. Oh, wait, no, sorry, you're going to be locked inside. You might as well come and join us. Unlock your mind, unlock your freedom. Share it with your friends. We've got 750 people signed up tomorrow. We don't have that many spaces left, so make sure that you sign up, and also make sure that you are early, because the system can only take so many people. But other than that, thank you very much for your time. I've loved the energy tonight. I've loved the interacting. It didn't feel like a 2-hour webinar, and hopefully tomorrow night will be the same. If nothing else, during this time of Corona, I hope that many people will look back as this is the time when they invested in themselves and they had a pivotal change in their lives. They made the right decisions for them and themselves and their families. And they'll look back on this time as one of those catalysts in their lives where they took their life to the next level. I hope that's for you, and that's our invitation. Welcome to the journey. We look forward to seeing you. And thank you to Lee and the team for tonight. I've loved your energy from each and every one of you. It's been wonderful. See you tomorrow. Cheers.
Bye, everybody.